Hello everyone, thank you all for joining online the Stefanini Open Banking webinar. I'm your host, Marius Scarlat. I'm a technical product manager for the financial industry here at Stefanini in Bucharest. In the last 13 years, I've been working in the banking industry, mostly as a business analyst or a team lead analyst for retail banking projects, such as CRM or core banking implementations, up to regulatory projects like anti-money laundering or GDPR. The purpose of this webinar is to address the topic of open banking, to understand a common level, and to have an awareness and exploring the new opportunities that we can address, and also discover how Stefanini can add value to your business. The structure of this webinar will be a 30 minutes presentation from my side and a 10 to 15 minutes Q&A time from your side. Shortly after the end of the webinar, on our website, on stefanini.com, you will find the recording of this event. If the time frame allocated to this event does not allow me to answer all your questions, I will reply to them in writing. Now, without further ado, let's step into the subject. Now, PSD2, we know, was issued to make the payment industry safer and more innovative. Now, open banking was born as a feature or a framework of PSD2. Being an event related to open banking, I will not stress the information on what PSD2 means for the market, as I assume that you already know. There is an abundance of articles and white papers online that you can later research and study. Open banking was started in UK as the version of PSD2, and it was a practice of sharing financial information electronically, securely, and only under conditions that the customer approves of. Application programming interfaces, also known as APIs, allow third parties to access financial information efficiently, which promotes the development of new apps and services, as the data is not only related to payments and current accounts, but extends to three main categories: customer data, including contact or employment data and financial history; transaction data, that means payments, transfer, or interest; and a most important part, value-added customer data. Here we can find credit score, asset valuation, income verifications. Ideally, open banking should result in a better experience for customers by addressing the following needs: improving payment capabilities, improving consent protection for consumers. For example, in order to ensure that customers retain control of their data after they terminate a service, not just revoke ongoing access, as it's already in case, but also automatically deleting data that has already been shared. Another point that open banking should address is expanding open banking into open finance, because it's not only just current account and payments, it's a lot more. Last but not least, it's developing the premium or cost-based APIs by extending open banking to other financial products. This action will drive more competition and better consumer outcomes. Now, from an international perspective, I will shortly present the high picture. Open banking started in UK, as I mentioned, and remains to be the leader there. Many other countries are looking to the UK experience as they develop their own models. Now, the graphic shows an evolution all across the world, and as you can see in Central and Latin America, where Stefanini already has a large print, things are shaping up as countries have largely adopted the UK's implementation model, but also added plans to include paid-for premium APIs. Coming back to Europe, and these are some figures that are related to UK. By the end of last year, there were 204 regulated providers out of which 134 were third-party providers and 70 account providers, with 61 regulated entities that have at least one proposition live with customers. The number of API calls is astonishing, meaning that the vibrancy and frequency of customers of open banking is continuously increasing. For this year, the goals were to finish the implementation that open banking framework and also improve usability and functionality. The steps for fine-tuning means also increasing customer adoption of open banking and also expand the third-party provider ecosystem. Furthermore, I want to present to you some use cases that are fully supported or will be fully supported in the future, just to have a better understanding of how open banking can operate on the market. I will not go through each and every one because this is not the case, but I will just focus on some important ones. For the already live scenarios, there's the account aggregators that allow bank customers to view their accounts from different banks through a single interface. This makes it easier for customers to use products from different banks and may increase competition by lowering barriers. Open banking eliminates the need of users to give their username and password to unregulated third parties. Building on account aggregation services, personal financial managers or PFMs review user finance to also provide insight on where the customer is spending their money. Some also make recommendations, some other PFMs make recommendations about budgeting and shopping around for better products. Prompting users to find cheaper deals may increase consumer engagement. Now, open banking allows consumers to share their transaction data with their chosen PFMs. Through open banking, those PFMs can be authorized to execute a payment, to schedule with providers offering a better deal for customers. This allows a much more comprehensive offering and a seamless customer experience. Now, similar to that, there are also financial managers solutions for small and medium enterprises. Here, this software allows companies to automate many of the functions of a conventional financial function, such as raising invoices, track payments, or make cash flow projections. Now, using open banking, the APIs can monitor the SME's finances without screen scraping or negotiating and building a proprietary connection which in time could become a key dependency to the provider. For the scenario in which open banking applications are either in testing or are newly deployed, I have stopped upon some examples. One of them is from the lending industry, a lending use case. In case of consumer lending, borrowers can give their potential lenders fast and reliable access to their bank account history and may be able to speed up the process of getting a loan and lowering the cost of doing so. A special case of consumer lending, which I found upon, is the automatic overdraft borrowing. Now, the open banking APIs will give lenders reliable access to would-be borrower's financial institution, like I said. This information is machine readable and guaranteed to be untampered with. Also, the API could trigger an automatic short-term loan from a cheaper pre-agreed lender, which is then deposited in a customer's bank current account. Now, in this case, it will allow them to avoid overdraft fees, but still access credit when they need to. Final examples will refer to an open banking use cases that are in design and soon to be available. One of them is slightly familiar because it already has some application for other companies. It's related to account sweeping. Now, bank customers who keep a rolling balance in their current account may be missing out on interest if they move the balance to a saving account. The open banking can be used to identify the funds to move and make the payments, and also to find the best investment option on the market and transfer the money into that instrument, that financial instrument. The product comparison, the final example that I have, refers to a product where we all use at least once a product comparison engine. Now, in the case of financial use cases, in the areas like loans, overdraft, or banking fees, a standardized approach should ensure the comparison and comprehensive situation to get customers the best deals and drive innovation and competition to customers. Now, open banking will allow customers to share their data securely and accurately with service providers and use open data to make accurate comparisons. This ensures that the analysis is high quality and accurate, and it can even trigger an end-to-end process. So from the product comparison, you can actually get at the end of the process the product that you wanted. Now, open banking has begun to transform the world, and I believe that this year will be a year of increased user adoptions when more and more businesses use an ever-growing number of open banking enabled products. It has the potential to pave the way to open finance. Like I said, it's not just payment accounts, and it is much more. As you can see, the more you gain, the more you open up, the more you gain opportunities. Now, open as benefits, I can highlight some of them. Open finance will educate customers, either individuals or companies, to better use financial services. They will benefit from proper advisory tools. The market has the potential to become more competitive and more attractive due to a boost in business and IT offering. And open banking will likely be swifter. Open finance, I'm sorry, it's likely to be swifter than open banking because open banking requires a significant infrastructure to be created. Now, repurposing the existing open banking infrastructure can reduce time and cost. Of course, there are some downsides. It's not everything peachy. There are quite a few challenges around the way, and the benefits will be more limited for customers who do not allow the same level of access. This could exclude customers who do not agree to share their data or result in them obtaining less favorable deals. I will just highlight some of the challenges along the way. Security risk. Now, if all customers' financial data is in one place, there may be an increased risk of fraud. Also, data quality is an issue because we all know companies or many companies have incorrect or incomplete data that could lead to the customer obtaining the wrong advice or recommendations, or the customer switching to an inferior product for the wrong price. A low offering could also be a disadvantage. There is the risk that the third-party provider is partnering with firms and may result that the third-party provider will only offer the partner products and services and would not add value to this type of collaboration. And also the lack of motivation could be an issue. The lack of incentives on firms to share data may prevent open finance from developing. So all this information from our point of view builds up into a single conclusion. Open banking is here to stay. There's a long list of potential use cases and business models that banks and non-financial companies can explore and can implement in order to serve in an open banking market and to build a successful offering with their customers. Last but not least, they will need to have a clear path to monetization from the beginning of the journey. The industry is being transformed, and the banks and companies will need to keep up with the banks or the fintechs will need to keep up with the pace, the transformational pace, and we will see many partners in order to bet between banks and fintechs in order to better serve the customers. Now, in Stefanini Digital Transformation Center, we already have the ingredients to bake the right cake. We can help our clients and prospects with customer-centric strategy, with operation and technology, and also security and end-to-end delivery. We focused our offering on 6 pillars. That offering will include new proposition, customer experience and service design, customer engagement, reference architecture, API monetization approach, data analytics, and cybersecurity analysis. Now, let's talk about what customer experience service can do for you. At Stefanini, we integrate innovative and effective technology solutions for businesses. More exactly, we are using the whole digital concept in order to bring together both digital operation and digital customer experience. Doing so, our customers will improve both efficiency and revenue streams, and their experience services are about using our teach expertise to support what matters the most, the relationship between your business and your customers. As an approach, we will start from the business, understanding your moment in the digital transformation roadmap and your goals to create that roadmap. We would like then to understand your customers and their journeys by identifying the gaps and the opportunities along the way in order to improve the relationship with you. On top of that, we will apply technology in a meaningful and effective way according to business and customer needs. By doing that, at the end, we will deliver the innovation through prototyping, testing, and also agile implementation, prioritizing and improving your customer experience. Now, I also highlighted here a practical approach that we want to share with you. It's like a project implementation proposal in order to showcase how we engage with you through design thinking in order to deliver customer-centric innovation. We have split the program in 3 major phases: exploration, innovation, and transformation. We start from macro layers with business-oriented workshops on innovation and co-creating in order to identify ideas and opportunities and establish together an innovation roadmap or a plan. This phase is planned to last from 1 or 2 days up until a week. Now, the next phase goes into details, deep diving the topic and validating prototype through rapid experience development and solution roadmap. The outcome will be a full strategy for the implementation of the new solution. The last phase implies the solution implementation and digital transformation optimization. From customer engagement perspective, digital is not only the normal touch point for most age groups, but the primary brand lens, determining perceptions and attitudes towards brands, even among older people. Now, this means banks need a deeper understanding of how experience drives brand value and how to distinguish between the short and long-term effects of customer experience investment. Our digital banking vision is value. It stands for velocity, adaptability, lifestyle and user-centric, and efficiency. From a customer engagement perspective, we are offering an end-to-end advertising campaigns, also lead generation performance campaigns that offer full media services for both business to business and business to customer. Digital asset development and optimization of digital assets for better conversion rate, social media services, and online brand reputation. And remember, digital experience is everything. From experience stock, looking at memorability of the experience, quality, and utility, whether consumers remember the brand as providing helpful ways of interacting with it across touchpoints. The reputation stock, looking at how much the brand is talked about, consumer sentiment towards customer experience, and how this affects behavior, how much people hear about the brand, and whether the conversion is generally positive or negative. And also brand delta, the net user growth, assessing the brand's ability to attract new users, where customers are using a brand more and adjusting for consumers using a brand less. The following point is, and the third pillar is reference architecture. Now, why reference architecture, you may ask? The design and architecture of a solution as large as complex as a reference architecture for open banking is a multi-dimensional challenge, and it may vary at every institution based on their existing investments, vendor products, and overall culture. This type of setup would require the involvement of 5 horizontal layers: infrastructure layer, data layer, service layer, predictive analytics, and API and user experience layer. Now, choosing cloud-based infrastructure, either private, public, or hybrid, is a safe and sound bet of these applications, as business innovation and transformation are best enabled by cloud-based architecture. The big data technology is the key, as the challenge drives not only from the data volumes, but also from the variety and need to draw conclusions from a fast-moving data stream. The service layer would better reply to microservices that have moved from the web scale world to fast becoming the standard for building mission-critical applications. Now, techniques like machine learning, data science, and AI feed into core business processes, thus improving them, and therefore the predictive analytics mission. The final layer would tie front human clients, businesses, regulators, and internal management, all of them tied up into an omni-channel touchpoint. Now, by reference architecture, we at Stefanini would help you support an API-based model to invoke any business process or data elements based on appropriate security by a third party. We can support the development and deployment of an application that encourages a DevOps-based approach. We support the easy creation of scalable business processes like customer onboarding, KYC, payment disputes, that natively emit business metrics from the time they initiated to throughout their life cycle. Another point is the support of automated application delivery, configuration management, and deployment. Related to analytics, there's a high degree of data agility and data intelligence that we can support, the end goal being that every customer click, discussion, and preference shall drive analytics, infused integration between the bank and the client. There's a high degree of scale across many numbers of users that we can support interactions and omni-channel transactions while working across a global infrastructure. We shall support the creation of a user interface that is highly visual and feature-rich from a content standpoint when accessed across any device. Now, the fourth relates to the app. The fourth pillar relates to the API monetization. Now, how can banks can, let's say, turn up their data into an income? Most banks have already made steps towards participating the API economy by producing internal APIs for internal consumptions. Therefore, we propose that the next steps from this point to be a progress to a development of affiliated programs in order to open their APIs to public consumptions. We call it like an API journey or an API journey, and it involves the following steps. First, you build an API marketplace, where it involves that the bank will open some of their APIs to trusted third-party developers. This will begin to build in a larger ecosystem around banking services besides the bank's own applications. The next step would be an API distributor. This model extends a bank API's marketplace by listing third-party financial services APIs, offering from partners and fintechs along the bank's own. Banks can deliver best-in-class products and best-fit solutions to customers by using data and services from other providers. On top of that, they can be an API aggregator. Like going further, many banks may take another logical step by aggregating APIs across multiple financial institutions through a single API of their own design. Instead of offering third-party APIs, an organization could offer an API that orchestrates a combination of native and third-party APIs into a more robust API offering to developers. This would lead the way to the final level of maturity, and that is to offer a set of open banking APIs that enables developers to integrate banking products and services into their own applications. Smaller banks could use these APIs to extend their product and services offering just by using an API from a larger bank. Alternatively, financial institutions can offer white label products and services for external providers to use under their own branding. And for, let's say, a better understanding, we also thought about some ways, some models in which this technical aspect could be turned into a money stream. One of the models that we thought about is a freemium model. Freemium is a good way to get started for both API owners and third-party developers. It could serve as a stepping stone towards subscription-based or charge per API call. In this model, companies offer developers some of their APIs for free, and then they can charge for additional functionalities or for additional data categories. The next, or the second model that we thought about is the balance sheet growth model. Here, the balance sheet, we know it's an important strategic resource for banks when opening their APIs to third parties. Now, many fintechs are seeking partners among the banks to provide core financial infrastructure and new products and services. Now, this could benefit banks by increasing assets under management and providing deposits for capital requirements. It could also mean additional interest margins where credit is involved. This model would be similar to how banks offer white label banking to third parties. The revenue sharing model is an option to encourage open innovation and co-creation with third parties. It is often that third parties get paid based on the popularity of their application. A revenue sharing model offers incentives for both API owner and application owner. This would work best on products or services that have monthly or annual fees. So basically, portion of those fees would be paid to the third party for elements such as credit card signups, insurance policies, etc. So basically, just offer your products to a highly considered application, or where customers are paying subscription yearly or monthly, depending on the business model. The final type of API monetization that we thought about was the rebate model. This involves rebates and cashback that can also be used for APIs that have a revenue generating transactions fee. For example, open banking APIs that are used for executing equities, trade, or processing payments. So bank can choose to pass on a portion of the fee to the consumer. In areas such as payments, where competition for volumes is high, providing a cashback option for using a specific API may be a good incentive. Retailers could also use discounts, or could apply discounts for cashback coupons to purchases made through the API of a specific payment network. Now, related to data analytics, I will not spend very much time on it. I would just like to highlight that we have a team ready to apply knowledge from business intelligence to predictive analytics to business insight generation. Our global data scientists, analysts, and architects use best-in-class software, hardware, and data visualization solution to help you and your business build a modern data lake, make the most of your data, and get the valuable and actionable insight. We can also help you build predictive models that can help your organization become data-driven. Depending on how you like to approach this, the data analytics topics, we are more than flexible to help along the way. Last but not least, the cybersecurity topic is it's a very hot topic nowadays. Customers who opt to use open banking apps to manage the banking data will now be in an entirely new, let's say, trust relationship. They will not be transferring the same trust to a lesser known third-party application. Now, they will move their trust from the banking environment to maybe a startup or a fintech. Anti-fraud systems or banks will have less data input to train computer models and to spot fraud in real time, as their customer financial data will get spread over multiple companies. While customers are now more aware of phishing techniques than cyber criminals, cyber criminals could pretend to be the fintech companies working with banks, and new phishing schemes are expected to emerge. Now, from a security standpoint, we expect a number of apps and feature flaws that attackers will likely to observe and take advantage as soon as the apps go live. Here at Stefanini, we can help you improve on this topic. Either if you are referring to a proactive approach with measures from penetration testing to vulnerability scanning, or detect and react measures such as security operational center, or up to governance and compliance action points. Now, talking about a little bit about each and every one, penetration tests and vulnerability scanning are methods to evaluate your IT system security controls. It can only be performed with your prior authorization and contractual agreement under control conditions and will replicate scenarios of how attackers would act to get unauthorized access to your company data, make applications unavailable, or even alter some information stored in your systems. Now, how could you benefit from this? One of the benefits is by finding vulnerabilities and fixing them before the attackers um, um, before they are spotted by the attackers or the hackers. Now, prove to your employers and business partners that you are taking all measures and you have a mature and proactive approach into this topic. And also by evaluating the efficiency of investments in IT security. Why an external should perform them? Well, for an independent review of the cybersecurity controls, efficiency, and in many cases, if it is faster than an in-house service, and it is also a means or a method in which third parties may find some information that you overlooked, and hackers may easily find. Here are some companies that referenced us as for pentest options, pentest scanning, sorry, and we just mentioned Carrefour and Orange, also the European Commission. So this image is like a business card for our cybersecurity team. From a SOC point of view, we can offer a smart automated data collection and analysis. Partnering with our colleagues from Alien Labs, we offer a threat detection powered with tactical threat intelligence delivered to the platform in a continuous and automatic way. So instead of having to write correlation rules and queries to sift data through, your team can focus on investigating and responding to actual security alerts. The final one, the final approach on cybersecurity is the IT security governance, risk, and compliance. Now, open banking might be, governance, risk, and compliance refers to the strategy for managing an organization. So overall governance, enterprise risk management, and compliance with regulations. It allows organizations to demonstrate resilience, to allocate resources, and to make decisions in order to reduce cyber risk while managing compliance with standards and regulations. Now, setting cybersecurity baselines ensures that the security process expands company-wide, not only in the IT security teams. So, as you can see, open banking is not just a regulatory or imposed approach driven by the PSD2. It's also a huge opportunity for the market, and also we see in everyday life that already companies have used this framework to develop new products, to develop new partnerships, and to expand the offering to their customers, and also to attract new customers. I think it's a mean to expand this already known approach on banking industry, and not only. So therefore, I think we should take a closer look on open banking, and we should invest more on this topic, not only to have the minimum compliance approach like most of the banks in Europe had when PSD2 came into effect. Now, I will, as I came to the end of my presentation, I will allow a time frame for questions and answers. Just a moment. Okay. Okay, so there are some questions. The first one is, will society use open banking? Yeah, it's it's interesting. Yes, a number, at least from the studies, more than that I found online, many respondents have said that they are happily to share their data with their bank or an established brand. However, there are some things to be considered. The new, let's say, the new framework is not open to everyone, because open banking is reachable and to customers that use online products. So if you bank online, you can gain immediate access to open banking. But if you don't bank online, and therefore you need to consider, you as a bank need to consider how you will approach those unbanked customers. So it's easy for consumers that are already using online products, online digital banking products, to be approached by open banking services or products, new ones. But it's quite hard to address those who are not online at the moment. So there was a saying, banking will always be needed, but banks as we know them could easily disappear. This doesn't mean that banks are going away, but being replaced by new competition. It could also mean that how we do banking will change, and this is a good thing. Okay, and the last, there are like a few minutes. The last question, there are like two questions. How do you think API banking will be in 2 years from now, and how much will it change the way traditional financial services are delivered and consumed? Okay, the bank can figure out how to efficiently offer the APIs, like I said, throughout their services, or maybe some partner with other companies. Now, bank accounts, as we know it, were not built for the web, and the customer experience is going to be extremely different a couple of years from now. 10 years ago, online banking was a nice to have, and it was not a necessity. And the key to success is being able to continue to offer differentiated customer experience by making it easy as possible for developers to build. So I think, yes, also the products that banks will be developing will not be the same as a couple of years ago. So they will adapt to the new world, the new way of being. Well, that's it from my side. I just want to remember all of you that the recording of this webinar will be available on our website, and hope to gain at least one valuable information from this session, and looking forward to share information with you via Stefanini in the future. Now, thank you all for joining, and have a good day.